When you hear an industry leader tell you that they've paid their dues, what comes to mind? I'm sure it's something you're thinking about. It tells you that they've gone through the ropes and they have scars to show. They fought many battles on the battlefield of business. That's the concept of I've paid my dues. And this time around, we're talking about paying your dues in full. Paid in full. You're very much welcome to the first episode of Paid in Full. And if you're watching me, you're about to get an insight as to what it takes to build businesses, what it takes to be able to say, hey, I can confidently stand on the podium and say, I've paid my dues. And I understand the pitfalls that no matter where you are in your business, I've been there and I've done that. That's the concept. And that's why you see captains of industries, people who have been there and done that. You see them receiving all the accolades. It's beyond the light camera action. They've gotten decades and decades of experience, days of tears, days of the entire bottom line on red. And then they are thinking on how to figure it out as to how do I, perhaps in one way or the other, make sure we declare profits at the end of the year? How do we declare profits this particular quarter or next quarter? How do we make sure our investors are saying that, hey, I love what you're doing, the CEO, and so take some more money. I'm investing in this company because I've seen that you've paid your dues. This is Paid in Full. You know the firm Nairametrics, and you sure know that we bring you top conversations. We bring you content in the world of business. And this is the first episode of Paid in Full. On this first episode of Paid in Full, we're going to be taking a look at asset management, what it takes for you to build successful asset management company. A couple of months back, we had Jamie Dimons, who is one of the front runners as regards the asset management companies in the world, one of the leading asset management company in the world, JP Morgan Chase. Amazing gentleman. He came to Nigeria and we saw many industrialists going around having meetings with him, trying to figure out, hey, what deal can we seal? And it gives you an insight how one person has been able to do something that a lot of people we want to join. And an entire country is trying to see how they can have a meeting with him. Now, asset management is massive. If you look at the largest asset management company in the world, is what their assets under management is about 11.4 trillion. That's BlackRock. BlackRock, massive asset management company. But then let's do away with what is happening in the US and the global economy. Let's talk about Nigeria. Let's bring it home. How many asset management companies do you know of in Nigeria? You're gonna find out about one. As a matter of fact, I'm sitting with one of the industry leaders from one of the leading asset management company in Nigeria. Before you talk about the guests, what is the concept of managing assets? So you know billionaires, you know companies that are making a truckload of money, but they have money sitting in the bank and they don't understand what it takes to invest those monies. And then they look for people who understand what it takes to invest. First, before you even invest, manage the capital. Because they always say the first thing you want to do about any investment landscape is to make sure, or any investment is to protect the capital, capital preservation first before even thinking on return on any investment. You need to protect that asset. And that's the idea of asset management. And ladies and gentlemen, boys and girls, men of timber and caliber watching me, whoever you are, I'm about to tell you who our guest for today is. So if you're driving, I'll suggest you park. If you're eating, don't get choked because you just might be getting some crazy insight from this conversation. I have no other person but Yemi Soneye, who's the Chief Operating Officer of Coronation Management Company. You're very much welcome to Paid in Full.
Thank you very much, Frank.
Oh my. Now, the lights, camera, action is what everyone is saying. You're seeing Yemi Soneye everywhere, trailblazing the asset management sector in Nigeria. But Walk us through your journey. Um, Let us understand the pain, the scars, what it takes to be Yemi Soneye, who's the chief operating officer of Coronation Asset Management Company.
Thanks, Frank, for having me on the maiden journey
Yeah.
of this program, Paid in Full, with Nairametrics. So I did start, finance through the traditional means, the traditional journey, where at the beginning I felt, look, I wanted to go into finance. In fact, I wanted to do something within the sciences. So I graduated from University of Lagos
Oh,
with chemistry. And then, as fate would have it, I started with one of the top audit companies immediately after my NYSC. I think that's where the journey starts. I did audit and advisory for a few years. I did banking for a few years. And I worked with one of the foremost asset management firm in Nigeria for over a decade. I did some other things in private equity, venture capital. I had a stint in technology as well, and also tried to do when the technopreneur opportunities came
very
up.
true.
I also tried my hands on that before coming back to asset management once again with Coronation Asset Management Limited.
So, what was your first professional role in the finance industry? Um, because what it was like you studied chemistry and pivoting into finance. They are two distant ends. You're trying to figure out what brought about that marriage. Is it a science of money? Is it is it trying to understand how things work? Because chemistry just sparks the curiosity in you. You mixing chemicals. You're thinking of how to you're seeing reactions and you're trying to figure out how you can mix this and get that. So you're trying to get how you can figure out how to take this money from this person, take that money from this person, take another money and build a particular asset, and you declare your profit, and you guys smile to the same bank. So what is the concept? How did what sparked that curiosity in you to go into finance?
So I would give that narrative.
Okay.
There's almost little or no relationship between chemistry and finance. Of course, doing sciences, you can pick some certain things in terms of observations and
Yeah.
then making conclusions. Um, and just to play that narrative in terms of using science and finance. So I left school, finished university, and then did NYSC, and then there are opportunities to do things in management consulting. So back then there was PwC, Deloitte, KPMG. Um, I think before KPMG was Anderson,
Yeah.
Arthur Anderson, and then so my friends were all writing entry exams into PwC, Arthur Anderson, and so okay, let me try my hands on it. So I started off with PwC. And I started off in audit and business advisory. So audit and business advisory, gave me the opportunity to go around different industries in Nigeria. So the way PwC does it back then
Yeah.
is that you're given the opportunity to go do the audit and assurance across manufacturing, oil and gas, and financial services. Coincidentally, my path was in that order. Financial services, was pretty much the end of my engagements across clients. And I did a lot of audits for financial service clients, mainly banks. And at that point in time, I took an interest in banking. And then started off after leaving PwC. So I spent just about under 3 years with PwC. And I think with that experience in PwC, my interest was piqued, in banking. And of course, while doing that, you have to actually gain the professional experience and then also back it with, writing the exams and gaining professional qualifications. So I enrolled for professional accounting classes while I was in PwC. And ultimately, I eventually became a chartered accountant with the Institute of Chartered Accountants of Nigeria. Um, after having gone through all that, so I initially cut my teeth in banking, with a bank called Lead Bank
Okay.
for a couple of years. And then at some point in time, asset management became a new thing in Nigeria. So the foremost assets management company in Nigeria then was, I think, a company called Denham, which has now transformed to Chapel Hill Denham.
Oh yeah, Chapel Hill.
Yeah.
Yeah.
And so
That's
you
right.
have Chapel Hill Denham, you had Stanbic IBTC,
True.
you have ARM. And those guys were at the forefront, of asset management, in Nigeria. So it was something that I found interesting, and I said, look, let me try my hands on this. And I got a role with ARM. And then, while in ARM, I got introduced into asset management. I started off the first corporate treasury in ARM. So previous to when I joined, finance had always handled treasury.
Yeah.
But when I joined, we separated treasury completely from finance, and then so we have corporate treasury, and you have treasury that speak to the needs of clients in terms of clients' investments. So it was in ARM, that I really really caught my teeth in asset management, because in fact I spent about a decade and a half in ARM. So that was where I spent the longest time in my career. And that gave me the opportunity to know, how the business runs. That gave me the opportunity to know how some other segments, of asset management or other business intertwined with asset management runs. At that time, I think the firm has interest across asset management, stockbroking,
Yeah.
private equity, venture capital interest. And I think at some point in time when the Pencom law was introduced,
Yeah.
so I was one of those that worked at strategy and finance level to provide the seed funding for one of the pioneer pension firms in Nigeria at that time.
Okay, so there are a couple of people who obviously not even people. I'm seeing somebody watching as we're speaking right now, and he's trying to figure out what is the concept of asset management. Not familiar with the term. Obviously, if you join add both words, you're managing asset, but can you walk us down the rope of asset management? What's like the history, how it started, the concept? If there's anything I can even think of, I know that was growing up. You hear something cooperative, people saving money, somebody holding on to that money for a particular time. And towards the end of the year, or you go to the market, you see one man, they're always growing up, you see one man with bike going to each and every shop, collecting money, and everybody's saving with that person. And that is, in some way, that's asset management. You're managing people's assets, but from true contribution. So let us understand the concept of asset management. Can you?
So what you've described is the
Yeah.
concept of savings.
Yeah.
Right. Then you're building, that habit of that discipline of putting some money away.
Yeah.
But asset management involves a little bit much more.
Yeah.
So what we do in asset management is to invest on behalf of individuals and institutions. So by institutions, I mean private institutions and even government. I think at the beginning you made a reference to Jimmy
Diamonds.
Jimmy Diamonds being
Yeah.
here
Yeah.
for JP Morgan. And those are, the people that were at the forefront of asset management. So when we look at that concept of managing assets, you manage assets typically for three critical objectives. You want to manage assets for capital preservation.
Yeah.
You want to manage assets for the concept of growth, and then you want to manage assets for income generation. So to do that, you either managing it. I think I've mentioned that you're managing it either for individuals,
Yeah.
or for public entities. And then there's a myth that asset management relates to managing funds for wealthy individuals and institutions. But I think over time,
Are you calling that a myth?
it's a sort of a myth. Really.
Okay.
Because many people believe that you have to have a large amount of money to be able to engage people in our industry. But that's not true.
So if your asset under management is take for instance, let's even use global industry leaders, BlackRock, $11.4 trillion. and I come to BlackRock with $1,000, would they answer me?
Absolutely. And that's why they have mutual funds. That's why they have ETFs. So, they previously,
Yeah.
maybe when you go back in history, when JP Morgan started, this concept of asset management,
Yeah.
and Thomas Edison was trying to, he heard about the man that failed 1,000 times, and
Sure.
eventually, he made the bulb. But then making electricity available to a large number of Americans requires huge investments. And it means that somebody would have to take that risk of investing in that individual, in that venture,
That's
to
right.
make that investment come to light. Now, you have a situation whereby you can pitch such an investment opportunity to a large number of people, who essentially come to pool funds together to make investments in such ventures. So the same way you look at asset management industries, where we launch mutual funds regulated by, SEC,
Yeah.
Securities and Exchange Commission, and then those mutual funds are sold to the investing public. What ultimately happens is that the funds from those mutual funds are deployed to secured instruments such as equities on the stock exchange, or placements with the bank, which ordinarily the individuals on the streets, the man on the streets, will find difficult to say, look, I do not have the capacity to invest in all these complex instruments.
Yeah, that's right.
But with asset management that has transformed from just addressing the needs of sophisticated investors to even, pedestrian investors, by democratizing access, to access, asset management through mutual funds offering and through technology, whereby, these mutual funds offering are also even made available to people via digital, means.
Yeah, I can really relate with that very well. I remember fresh out of university, got attracted to what is happening in the world of finance. And I was like, okay, my first mutual fund, I think I got it in 2017 or 16, 2016 or 17. And I just heard about having to invest in so many companies, but in one basket you get, and that way you take a chunk of the pie. I think it's pretty much amazing. But the return on investment and it looks like most asset management company cater to the baby boomers. They cater to the high network individuals. That's the concept. You're calling that a myth, but it's somewhat like it's more or less like a reality, because if you look at the body language, your tonalities, your brand tonality, you don't appeal to the upcoming guys. You don't appeal to Gen Zs. You don't appeal to millennials. Yes. You might feel that those guys don't have money. Those guys have a truckload of money. Look at what is happening with crypto. Who are the guys moving the crypto industry? They're more or less the millennials, the moonshot boys. That's what they call themselves. So why is it that most asset management companies, they only focus on the baby boomers? And remember that the baby boomers in 20 years, many of them will be down the drain. And so what is the vision of what are you guys considering the next generation? Is there is there, how would I put it? Is there awareness? Is there sensitization? Is there the next gen? Many of them don't understand the concept of mutual funds. They don't understand even the so-called stocks. Many of them don't understand. There's this apathy towards it. So what do you think the industry is doing about that?
Well, I think the industry largely, or any industry,
Yeah,
would always think of who would continue to consume either my product or my service,
yeah,
right? And then, just as you said, you have a generation moving on, and then you have another generation taking over. Now, what the difference is the nature of engagement, right, across generations,
sure.
right? And I think, whereas a few asset management companies may have ignored the transforming landscape in terms of the handover from one generation to other. A number of asset management companies, including Coronation, recognize the fact that the next generation is what is going to essentially enjoy the services going forward.
That's right.
So one critical thing is important: investor education. Right? You need to educate investors that these opportunities are available for you. So that thought that it's baby boomers that are only interested in stocks, we need to demystify it.
That's right.
And educate investors that look, these offerings are also available to you. We need to also make it necessary for investors to understand that these instruments are accessible to you, and not just accessible to you by way of just pitching it to them, but by showing them that that investment is accessible through your preferred means of making investment decisions.
Yeah.
Um, we do this in Coronation through what we call, we tell our investors that, look, you have the opportunity to learn, you have the opportunity to play, and you have the opportunity to take investment decisions through a number of digital channels that we have exposed to clients. So how do we tell clients that they can, learn about investment? It's through financial literacy. For us, we have what you call Coronation Academy. It's a digital offering through which you can actually learn about asset management, learn about stocks, learn about what is a bull, what is a bear, and then what market insights are through such digital engagement.
Yeah.
You can we have a gamification platform through which you can actually speak, gamify how investments
Works.
works.
Just like what's it called? Monopoly. The game Monopoly. Like it gives you insight into the world of finance, money making, managing money, and it's quite interesting. So you're trying to gamify the idea
You're
and
right.
making it digital. But then let us talk about how you manage client funds, because they say money brings out the true nature of a human, whoever you are. You don't is when you have money to sponsor your proclivities, that you know that, oh yeah, these are my tendencies. This is what I know how to do, or this is, and a lot of people don't joke with their money. The rich, the poor, they don't joke with their money, and it's a very sensitive part of any human, handling the monies of people. How do you handle their funds? Um, do you think, oh, this is the next wave, or this is the next big thing to invest in? Is there a step by step approach to investing people's funds? Because knowing fully well that if anything goes wrong, who's held liable? Is it the asset management company, or you both share the risk? Let's start from there. Do you both share the risk? Uh,
That's an interesting question. And I think when you speak to how do you manage clients' funds,
yeah.
I think it's good to break it down to the basics
Yes, please.
of before you take investment decision,
All right.
right? What kind of engagements do you have with the client? How do you profile the client's risk based on the kind of engagement that you have?
Oh,
And when you profile the risk based on the engagement, I think what the first filter from that engagement with the client, the first filter you will get is what that client's financial objective is, right? And in the course of you know defining what that person's financial objective is, you begin to understand the kind of risk that that client can take. So, for instance, someone say, "Look, I want to make this sort of return over the next 3 years," and then you ask the question, "Would you be willing to take this type of risk?" And then the client will say, "Okay, yes, I'm willing." But then you, as an investment professional, would have to weigh that risk along with that objective that the client has.
Yeah.
And also consider the state of that client's financial journey. So, for instance, would you, if a client is close to retirement, let's say he's 5 years from retirement,
You don't want to hear Bitcoin.
and it tells you, and it tells you, I'm willing to take a significant risk.
Yeah.
As an investment professional, you will tell the client, look, sir, you at this point in time, you need to step on the brakes.
Very true.
Right. So when you said, look, at that point in time is not when someone will say, look, I need to take significant risky investments. So the client engagement, the nature of where that client is in his investment journey,
Yeah.
and what he intends to achieve, will help you to set, define the risk bucket that client belongs to.
Okay.
Whether his risk bucket is low, moderate, or high.
Can I tell you what I want you to invest in as a client? Or would you be the one to tell me? You're an asset management company. And obviously, it looks like you would tell me. But do I have, is there a room for me to tell you, hey, irrespective of what you think is my risk appetite, do this. It's my money.
No, you can't. But then, so you have instances where, we say we manage clients' fund from a discretionary standpoint,
Okay.
a non-discretionary standpoint. So from a discretionary standpoint, it means that we, as portfolio managers, can take discretions on your behalf.
Yeah.
Having properly profiled you and agreed with you that this is the risk bucket that you belong to, and these are the kind of returns that you are expecting.
If anything happens, who do I hold liable?
If things happen,
Yeah, if market tanks and my investment goes down the drain.
So, if market tanks...
Based on your discretion.
So that is why you have investment professionals. The idea now, we are not yet at that point where you ask me about reward and,
Yeah.
It is not in the interest of a fund manager or a portfolio manager for portfolio to be in decline.
Yes, obviously.
Because the growth of the portfolio or otherwise is linked to the reward of the fund manager, right? So I will not...
That's where you get your commission.
That is where we get what you
and
call
fees.
our fees.
Yeah.
Right? So if it means that I am declining the wealth of a client, then the return to me is becoming zero. So hardly do I find instances where you sign an investment agreement that says, look, if this investment goes to a loss.
Yeah.
So the clients, in client engagements, right, you both understand the kind of risk that, the portfolio manager can take on your behalf. And the portfolio manager is trained in such a way that, they do not take haphazard investment decisions on clients' portfolios.
I'm in my 30s. Let's say, it's not even let's say. Okay, let's say let's say I'm worth millions of dollars. Or let's say I make my first $1 million or my first millionaire. What investment advice would you give me? Start with me. And you sure know that it's a financial advice.
So,
I want to be your first client.
So I restrain from giving financial advice.
Okay, but hypothetically speaking, what investment advice would you give somebody like me?
So somebody early 30s.
I make my first million.
Hit it real high.
Yeah.
At the very, very beginning. It is possible that you structure investments in such a way that person is a bit far away from retirement.
Yeah.
It's possible to balance such an investment whereby, one, you put some funds in instruments that will generate some kind of steady returns. You limit as well the exposure of some of the funds
Yeah.
to risky assets.
Risky asset.
Risky
Like
assets like equities.
equities. Okay.
Beyond the boundaries of equities, I cannot speak.
Interesting.
So-
But the reason why I'm saying this is because it looks like many financial institutions are beginning to see you see their books, and you're seeing crypto as part of the part of their books, and they're exposing some of their assets.
So locally,
Yeah.
right?
Yeah.
That exposure in terms of the guidance,
Yeah.
both from SEC and CBN, is not
Allowed.
Is not at this point in time. There are no clear drafts into how you can be exposed to such assets.
Okay.
So, for a SEC licensed institutions like us, you cannot engage in crypto trading.
Yeah.
But I think with the election of Donald Trump,
Yeah.
it appears like in the US it's likely, and I think SEC has given some. The US SEC
Very true.
has given guidance regarding trading on
Okay.
cryptocurrency and others. And I think maybe with further adoption of cryptocurrency, then maybe if the United States is leading the charge, and everyone is seeing that it is making sense in
Okay.
the United States, perhaps other geographies will start adopting.
So asset management companies, this is just a straight jacketed question. Do you only invest in financial instruments? Do you take people's funds and invest in this financial instrument only? So, for instance, can you see a solid guy who's building a crazy startup? You're seeing all the numbers, everything. Just the coast is clear. You know that there's lots of prospect here, and this guy is most likely going to be the next Flutter Wave, the next Money Point. You know these companies now. Can you take money and invest in those guys?
So I would say
No.
I'll say no and yes.
Okay.
No to traditional asset management companies like ours.
Okay.
Right? Because you are guided by the Securities and Exchange Commission.
Oh, wow.
Right? And you deploy your clients' funds towards, assets that are generally that have been de-risked.
Okay, the risk.
Yeah, by de-risk means likely traded on stock exchange, fixed income instruments, listed on FMDQ,
Yeah.
etc.
All right.
Now you have a specialized set of asset management companies, mainly private equity,
Yeah.
and venture capital companies.
Yeah.
So the private equity invests in brownfields institutions that are possible, that are scalable and still have an ample bit of growth.
What's the difference between between private equity and venture capital?
So most of the time, private equity invests in tested institutions.
Oh.
Right. So you see a company that is.
So they have informed data.
Yeah. So there's informed data on the company. So you're looking at it. Look, what I need to do when I acquire this company.
Yeah.
Is to bring on management efficiency, turn it around, and ensure that it delivers better financially than what it is doing.
So it's just more or less like linear growth.
Exactly.
But can it be exponential?
It could be exponential.
Yeah, because
it could be exponential.
Okay.
It's already tested.
Oh, okay.
That's why I say it's brownfield.
Oh, okay.
Venture capital, sometimes the company is completely untested. It's completely untested water.
Very risky.
You are just betting on Thomas Edison that this light bulb, this light bulb is going to work.
What if you give up on the 90th try? He tried it 99 times.
So that's why,
investors' funds are gone.
So that is why venture capitals have that staying capability.
Okay.
That staying ability to say, look, I have, let's say, 1 billion VC funds.
Yeah.
Right? And I'm deploying $10 million towards a particular venture. So even if that venture is not successful, it doesn't matter to the overall size of fund that I have.
Okay.
But if that venture is successful, it may actually grow significantly even beyond the total fund that I have.
Okay, so what about rounding off now? What would be your advice for anyone who's looking to come into finance? And very much, obviously, when people hear finance, the only thing they think about is banking, especially in this part of the world, the global south. And there is more to finance than banking. So, what advice would you give to anyone who is looking at coming into finance?
I mean, so if you want to start off with finance, I think the very first thing is actually to expose yourself to people who are within the finance
Okay, exactly.
sector. Find someone to mentor you um, regarding the different areas of finance. So you have maybe a friend doing banking, a friend in VC, a friend in PE. But beyond that, you have to expose yourself to the kind of education that finance professionals do
Yeah.
expose themselves to. So there's accounting education, there's investment management education, and then you need to actually be ready to pour over a whole lot of data and insights around finance.
Okay.
So when you hear things about when maybe Nigeria's budget is released, research, you need to pour over research materials. And I think there's abundance of materials, research materials from Nairametrics,
Yeah, that's right.
from Coronation, from
Yeah.
many other, asset management firms. And of course, that journey is of self-discovery is such a journey that as I said earlier, your mentorship and the people that you surround yourself with
Yeah.
will help you go in that journey very, very far.
Oh my. Fireside questions. Crypto mutual funds.
Mutual funds.
Equities mutual funds.
Equities.
Equity. It looks like you love taking a lot of risk. Okay. Let's. I saw something and it went viral, and I'm going to actually let me even read it. It was this month. If you're watching, let me read it. We're rounding off now. Let me just read this. I have to read it. So there's somebody called Akinlabi. I don't know if you know him, the founder of Naira Bet. And he said something. He said, somebody tweeted something. He said, building houses for rent is a bad investment. Yeah. He quoted it. Akinlabi came up and said, never again for me. I did it for 5 years, 2013 to 2019. I have sold some of the properties. Some I even let people live in for free. Free is better self. Are you of the same school of thought? Do you think building properties, you're giving investment advice, but do you think building properties, building a house to rent is a good investment in 21st century?
It's easy um, to make a statement
Yeah.
about this is not working because sometimes we make investment decisions without first understanding what our investment objective is.
Yeah.
Right. So it's possible to say, look, if your objective is to build to rent, then you would probably do it better.
Yeah.
But if your objective is to build to sell, it will be a different experience.
Okay.
But if your objective is to say, look, I'm building to gain rentals and eventually
Capital gains.
there will be capital appreciation. The outcome would also be different. So I won't say I necessarily disagree with him.
Yeah.
But how worthwhile an investment is dependent on how well you craft your objective from the beginning.
Who's your investment genius? Who would you say this person, oh my goodness, is the holy grail of investment?
Halfway better share.
Oh my, it just has to be him. Oh my. Ladies and gentlemen, you've heard, are you paid in full?
Of course, I'm paid in full. Thank you.
You've heard from Yemi Soneye, who's the Chief Operating Officer of Coronation, Coronation Asset Management Company in Nigeria. Done a lot in the space, decades and decades of experience. And he said that if you want to come into finance, make sure you get somebody to mentor you and understand your investment threshold, your risk threshold. Whether you're the one that can take more risk, know your age, know what your objective is before investing, and make sure you seek financial advice. That's it on today's episode of Paid in Full. I'll see you on the next episode. Make sure you stay profitable and make sure you seek investment advice and financial advice. Cheers.